Let me ask you this, because the president of the European Central Bank said that low interest rates in the Eurozone has not hurt banks, and he says interest rates will remain low, quote, well past the end of its bond buying program. What do you say to that? I mean, I know even Europe is recovering, and yet they're planning on keeping rates real low.
Yeah, so here's the issue on low rates. While Europe is doing better, you got to put it in context. They're still growing at historically sluggish rates. And so I think when I see a 10-year Treasury at, in the mid-230s, what does that tell me? One of the things it tells me is there's a lot of global liquidity because of all the quantitative easing. We're the Fed, by the way, and I'm glad we are starting to reduce our balance sheet, and I think we should. But the other thing it's saying to you is prospects for future growth are sluggish. And why? One of the big reasons is the demographic issue I just mentioned earlier.
I see.
Slow, aging population is true in almost all advanced economies. And by the way, one of the other headwinds, in my opinion, high levels of government debt to GDP is also likely a headwind for future economic growth. And so that's the reason I think rates are low, and probably why Mario Draghi wants to keep some flexibility and as he thinks about how he's going to manage them.
Let me ask you about your colleague, Jay Powell, the president's pick to replace Janet Yellen when her term ends early next year. What can you tell us about Jay Powell? Will the Fed be much different under his leadership, given that he's been your colleague and on the Fed for so long?
Yeah. So first, I'd say I've worked closely with Jay for over 2 years. He's superb. He's outstanding. And so I think I'm very excited about Jay Powell becoming chairman of the Fed. I think, like any good organization, though, with a change in leadership, we should be reviewing our practices. We should be looking for ways we can improve. The world is changing. The economy is changing. We need to adapt to that. But I think Jay will be a superb leader. But we know him well around the table, and we work very well together. And I'm confident we'll be committed to rigor and excellence and debate and coming up with good decisions.
All at a time when you've got to, unwind the balance sheet. You've never done this. Is unprecedented. Yeah. Do you feel it could be disruptive?
No, I think, and Mary, I'm not a PhD economist. I'm a markets person, and my belief in designing this plan. For your viewers, we're not, as they know, we're not selling securities. We're letting maturities run off as they come due, and we've done it in a phased-in way. So when you look at the size of the phase-out relative to the market volumes in treasuries and mortgage-backed securities, I think this will be manageable, and I think this will go well.
It'll be manageable. Sir, good to see you. Thanks so much.
Thank you, Maria. Good to talk to you.
Robert Kaplan.